Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we are down roughly 4% on the 1 hour chart. We are currently near the oversold RSI. Earlier today we were touching oversold RSI, and on the 4 hour chart we are approaching negative MACD, and the RSI has not been oversold yet, so that is a bit concerning. So on the daily chart, we do see a possible reversal. We see a nice candlestick pointing up, and we could say that we have made a higher low, and this is still in formation. However, it's too early to indicate that this uptrend is still intact, or this minor uptrend is still intact. However, we do see the daily MACD is converging, and it's still negative on the MACD, and today's volume is much larger than what we expected in the past several days. So at the moment, I do see a possible resistance at the 50-day moving average, this yellow line that we got rejected back in October 16. So that is our first resistance. And as for support, the next possible support, if we do break down this higher low and breach down lower, the next support will be around $18.90. So that is our last support. So if we were to head on higher, that price movement is roughly around 6% to the upside. To the downside, it's roughly around 2% to the downside. So let's head to the forecast model. So this forecast model is now available in the link below, so check it out. So back to the forecast model, I'll go day by day where natural gas will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models is the best match? Ideally, or this is the current trend, and the trend below is the trend that I believe is the best match, and this dates back to April 29 to July 26, 2010. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we start off on the bottom Bollinger Band, and then we proceeded to make a nice uptrend to touch the upper Bollinger Band. So let's make this green. And next we proceeded to head down lower to touch the bottom Bollinger Band one more time. And next we see it revert back to the mean to touch the middle Bollinger Band right towards the end. So we have those points. And on the trend below, or in question, we see a similar pattern. We start off touching the bottom Bollinger Band. And then let's just mark all the instances where it touches the bottom Bollinger Band. So we see the second one right there. In between those two, we see it touch the upper Bollinger Band. And then lastly, we see it touch the middle Bollinger Band right towards the end. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. And let's head to the forecast model. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. And the model that we just examined was back in April 29th to July 26th. In 2010, back then, natural gas was up around 2.8%. So next coming days. However, there's some similarities in between these two models. So what we have here is May 3rd to July 28th, which is fairly close to the model that we just examined. However, the model, another similar model, forecasts another or a different lower price for natural gas. It forecasts a dip below 4.4%, and the model that we examined was up 2.7%. So let me show you what I mean. So this is the trend that we just examined. We will approach higher or possibly higher Bollinger Band touching the upper Bollinger Band. However, as the day progresses, we do manage to head down lower. So there is a possibility this may happen. So keep in mind that natural gas could either go up 2.7% or 4.4% down. And I also got a lot of requests that this forecast model, everyone wants to try it out. So on the site, I now release it for free, or a 7-day trial. So try it out, register, sign up, and start using this experiment or this forecast tool. And if you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.